This is the Rich Dad StockCast with Andy Tanner, the show that kicks 401ks in the asphalt and teaches you to be the master of your own stock investing domain. And here's your host, Greg Arthur.
Thanks for joining the show. I wanted to start this off because we're getting a lot of comments on how can you have a StockCast, stock podcast, when Robert Kiyosaki's always talking trash about the stock market. So I want to read something
that's probably a question I should ask.
So I asked Robert. Did
you really?
Yeah, because I can answer it my own way, but I actually wanted to write down what he wrote.
Really?
Yeah.
I'm fascinated to see what he said.
So here, I'll give you the light version. He just hates it when people buy low to sell high.
Yeah.
It's stupid. It's gambling. And that is what the whole world is taught to do. That's what you're taught to get a 401k and be called an investor, but you're not. And so he feels it's a trash on the 401k system where you're lying to yourself. You're not really an investor. And it's a trash on the whole mentality of how the whole world sees stock investing because it's completely wrong.
It's almost like a person like me. I would have guessed that would have been his answer, because if you ask him what he thinks about house flipping, right, he hates it. So I hate those real estate investors because all I do is buy low and sell high, and they try to flip houses. You can't do that. Really what I would say is we're not a fan of is financial ignorance, and we are a fan of people understand cash flow. Because if you were to look at a distribution, let's say Kenny McElroy, buys a 300 unit, apartment house, maybe B class or something like that. And he raises a bunch of money from investors. Well, when they pay the rent, if it's profitable, if it has earnings, they take that money like this, and they, like cards around the table, they distribute that to all the investors that own the property. They distribute, and it's called a distribution. So I have real estate. I'm in syndications, and every month I get distributions from the properties that I'm involved with syndication, right? Now I don't have nearly as many as Kenny, but I have a couple. So we have some distributions. Okay. A bunch of people get together and buy the Coca-Cola company, and they sell drinks, and they have some money and some earnings. They take that and they divide it among the owners. What the difference between distributing and dividing is, I don't know, but that's called a dividend.
Right.
And so it's the same stuff. And that's really a good actual foundation or preamble or preface to what we're going to talk about in terms of what it means to own a business.
I'm glad you want to start there. Yeah.
Yeah. You're not making money off the ups and downs, like Fruit of the Loom underwear that Buffett owns. Well, that's not a stock because it's not publicly traded. He owns all of it. He doesn't wake up in the morning and say, gee, I wonder what I could sell my company for today. Any bids, any takers? What could I sell it for? He doesn't panic about it. He says, hey, do we sell some underwear today?
Right.
And so it's about the production of value that you're making your money off of, rather than the ups and downs of a house or a stock. But I agree with Robert. 401ks are built that way. That I hope the price is high and I can sell it high later when I'm old. And that's not our philosophy of cash flow. So I totally, it's funny how Robert and I can disagree on so many things, but we would absolutely agree on cash flow. And Robert just likes real estate better. Why? It's got better debt opportunity.
But there's another reason too.
Or better.
Well, yeah, obviously, but more simple. People get into the stock market not thinking they need to get educated. It's such a low barrier of entry. Yeah, so the stock market's more dangerous.
Drives us nuts. Yeah.
Yes, and so that's why he's so harsh on it.
And he just kind of
he's trying to save people, and steer them because, for example, you just gave the cash flow example. You used real estate because people understand real estate and rentals. How many people who want to explain what cash flowing is use the stock market?
But no one does. It's buy low, sell high. CNBC is 100% buy low, sell high. It's always about the price.
Everything is that way. And
so if you open up this year's Berkshire Hathaway letter that Warren Buffett writes every year to shareholders. He says the number one thing is the earnings that the company brings in. He says it's not the stock, it is the number. He said, quote, most important, unquote, is, are you serving customers? Are you helping humanity in some way as a capitalist? And are they voting for that with their dollars?
Yep.
So that's killer stuff.
So let's take that further. Let's talk about.
I was talking to Robert last week, and we have a weekly meeting. You do too, where we all study together. And we were talking about that very thing where we were talking about Jim Rickards, and he was talking about depression and crashes. And I'm like, why don't they just hedge? And he says, Andy, that's why I send people to your classes, because real estate, if it burns down, you have insurance. Well, here's where stock is even better, because if the real estate burns down physically, you have insurance, but if the price drops, you don't. You just, you can insure the price of the stock to insure your capital so it can live to cash flow another day. Yep. So I don't like to get in the asset class war because it's stupid. Anyone who bashes real estate just shows they're ignorant about real estate. Anyone who bashes oil shows they're ignorant about oil. Anyone who bashes green energy, ignorant about green, because there's opportunity and pitfall in all of them.
Yeah. Every
single one of them. If you bash the stock market, go to Warren Buffett's house and tell him, well, you're an idiot, for being in all these stocks. You're a moron. Why would you be in the stock market? Well, Buffett doesn't have a 401k, does he? Anyway, don't get me started.
Right.
Or let's get started. Either way.
No. Hey, let's take it. Well, actually, where you started to go, let's talk about how to run your stock investing like a business, because honestly, that's what people need to hear so they understand cash flow.
Let's do it. First of all, I get to do one of my favorite. You can see I'm excited. I get to do one of my favorite little tricks here. I won't put you on the spot, but I'll put everyone else on the spot. I love doing this. Mentors are so much more powerful than books, in my opinion. And so often when I go out and I don't speak much anymore, but when I used to go out and do a lot of speeches, I used to say, how many have read The 7 Habits of Highly Effective People? And everyone would raise their hand. I'd say, what'd you think of it? And they'd say, oh, life-changing, fantastic, amazing. I go, would you recommend it to other people? Oh, absolutely. Did it change your life? For sure. I go, name the 7 habits. Go. What are they? And people are like, I used to pull out $100 bill and say, anyone can name them right now without cheating. Go right now. Just name them. I've never had anyone in thousands of people that have been able to do it. Right.
I can't do it. Yep.
And so this is what's fun is I do the same thing with Rich Dad Poor Dad. 40 million copies have been sold.
Over 40 million.
40 million copies been sold. 92 languages or something like that. And I say
40 languages, 90 countries.
And I say, was it life-changing? Oh, best of all, number one all time, personal finance bestseller. I go, great. Name the 6 lessons. I asked Robert someday, right? What are the 6 lessons? Awesome. So I'll just ask people, watching it in their car at home or whatever you're doing, watching on your phone. What are the 6 lessons? If you love Rich Dad Poor Dad, if you can't list the 6 lessons, have they blessed your life? So it's pretty easy to remember them because the first one and the 6th one are almost the same. The first one and the 6th one are about what you work for. So the rich don't work for money, but they do work. At the end, they work for what? They work to learn, right?
Yep.
So 1 is don't work for money. 6 is don't work for money, work to learn. Okay. Number 2 is financial education, right? Number 5 is the rich invent money, right? Number 4 is about taxes. Number 2 is about financial education. But number 3 is the one we would talk about today. What is lesson number 3 in Rich Dad, Poor Dad? And it's something people tell people all the time. They say, hey, mind your own business. That's lesson number 3, right in the middle there of those 6 lessons. And so if you've read Rich Dad, Poor Dad, mind your own business, which means that what are you doing? What do you own that produces value to the world? What do you have that's yours that produces value to the world? Now, if you have a job, you're working for money. You're breaking rule number 1 because you can only serve one master, a boss. But once you own your own business, you can serve the world. Billions of people you can serve. And that opens up a lot of possibilities. So I think what happens, Greg, is people read the book Rich Dad Poor Dad and they say, I want to move from that working for a job to owning assets. And so now they have some choices: business, real estate, paper assets, and commodities. And they look at those and they say, all right, what am I going to do? Well, the commodities are really more for hedging. Gold doesn't cash flow. Bitcoin doesn't cash flow.
Yeah.
That's kind of out. You're going to play the up and down game, and that's just too tough to do. So when Robert says, and when I say we love gold, we love Bitcoins, stuff like Ethereum's, that's really oil. That's really because it's hedging against dollars, preserving wealth. It's an insurance policy. So off that one goes. So now you're looking at, for your cash flow, business, real estate, or stocks. So let's look at business. That's if you only want to make money, and maybe you have a good mission around the business. I tell my sons, I go, that's probably the best way for a person to go from rags to riches. And the reason is when you sell a product, I would imagine most people can mark that product up 100%. Would you concur? Probably not in a restaurant, but
it's funny. I struggle more with the first line. You said that that's the easiest way. Man, I found business to be incredibly difficult.
Very well, point well taken. I shouldn't say it's the easiest way. I would say it's the most lucrative possibility. If you can do it, it is the most lucrative. That's a better, you are correct.
Okay, but let me also add one more thing.
Because it is the hardest thing you'll ever do.
It's got the most pitfalls, I think. Like, I've done stocks, I've done real estate, I've done business. And guess which one just kicked my butt?
Business requires the most work, for sure. It requires the most work. You got to know how to sell, or teach people to sell, or hire people to sell. You got to be able to market. You've got the big guys you've got to be able to take on. If you've got a product that you love, you make a great burger. McDonald's is going to be tough to beat.
Yep.
Not because their burger's better, because they're just better at business than you are. And then franchises cost a lot of money. If you have a business that's already proven to work, well, there's $1 million that's barrier to entry. And if you're serious about business, going part-time, that's tough. You pretty much got to cold turkey quit that job. And most people just aren't in a situation where they have the guts to do that, because they're addicted to that paycheck. They need it to survive. So the idea of quitting a job and just starting a business, I don't know how to do it. I wouldn't know the first thing. I'm not a leader. I'm not a boss, blah, 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 blah.
Business. Let me add a couple more. Getting the capital to start your business.
Number one.
Brutal.
Now, see, for a guy like me, that's gravy, because I'm a good salesman. I say, look at this plan, and money flows in. But executing it is the bigger issue for me. I can raise the capital, but like a lot of people, that's not their thing.
It's not my thing. And then I had a problem with one other thing, and that was inventory. You have to, it's constantly flowing. It's constantly costing you money. Yeah. And when you're in a restaurant, it expires. And so
you got to move it. It's one of the most, and people say, well, I want to work on my business, not in my business. And that's even tougher to do, to just train and be a leader only and not be stuck flipping a burger if you're just starting out. So I agree with you. It's the hardest one of all. But if you can pull it off, it's very lucrative. Like, I'll give you an example. I'm in the book business. People say, Andy, do you make more money trading stocks or writing books? Writing books by far. I'll tell you why. My Amazon Kindle book costs me $0 to produce. $0. I sell it for like $9. I think I get 7 of it. I don't even remember what it is, but like 401 Chaos, I put that on Kindle Direct, cost me nothing. Upload it. Whoop, 0 in, 0 risk. But I have to be able to sell it, write it, promote it. All that stuff still happens, but it costs me nothing. There's no piece of real estate. It cost me nothing. I had to raise no capital. I had to borrow no money, no debt. And you get an infinite return on that, because whatever return I get, I divide it by 0. That's infinity. So the book business is, I don't make a zillion dollars in it, but I make a lot of money in it per unit, like per book versus per share of stock. I'll never have a stock at 0, but I sell it, $10 or whatever. Does that make sense?
Yeah.
Business is awesome to be in. It's fantastic if you can pull it off, but it's brutal.
So can you explain running or investing in stock as a business? Because to me, it does two things. It takes away a lot of those pitfalls I mentioned that I fell in, and it also let me start at a much smaller scale.
Now that's your trade-off, because a business can, like, I had a guy who was a mortgage broker, and he was forced to do it because in the subprime meltdown, he lost his job. So he didn't quit his job, he lost it. So now he had to do something, and no one was hiring mortgage brokers. So he started a business and he killed it. He borrowed some money, raised some capital. He was in the black in 3 months, sold the business later to the Larry Miller Group, went from rags to riches like in a year. Okay. It was amazing, and set up the rest of his life, millions of dollars, bam, he pulled it off. However, I think the greatest investor of all time is Warren Buffett. I don't think anyone's done it better than he's ever done it. And you know what's amazing? And someone will call me out on this because I'm probably wrong, and I hope they do. When you put it on the internet, there's always those engineers saying, you're wrong. Here's the instance where you're wrong. So welcome, show me where I'm wrong, because I probably am. But to my knowledge, he bought Berkshire Hathaway. They were a textile company, and he reorganized it into a holding company. I don't think he's ever started a business. I think they've all been bought. So you think about that. You're not going to go rags to riches there. And Buffett didn't go rags to riches. He went riches when he started to raise capital from other people. But when he first started out at, 9 years old or whatever he was, he bought a few shares of stock and he became an owner of a company. And here's what the good news is, some people don't have the stomach for the debt or the knowledge for the debt for real estate. Real estate would be my next choice after business, to go fast. And it is faster. Because your debt is a lever, it's accelerator, it is faster. But not everybody can stomach that, right? And so the place for paper assets is, what is a piece of paper? It certifies ownership. So really, real estate is a paper asset. Ooh, don't tell Robert I said that.
No, right.
But if I say, prove that's yours, and he'll say, well, here's my deed. I go, what's that printed on? Well, there's a piece of paper somewhere. If I say, well, you're part of that syndication, prove it. Well, there's a piece of paper that he signed with Kenny somewhere that says this is what you own. Well, that's all a stock is. And to say paper's not real, Apple's real, dude. You can go see their headquarters. You can look at their products. They have incredible intellectual property. It's very valuable. They have awesome management, awesome innovators. I think I'll be their owner. I think I'll buy some Apple and be their owner. But it takes time. And that's called compound interest, where we take profits, reinvest, take profits, reinvest. It's not a fast way out of the rat race. If you learn options, it gets faster. But it's a compound way, but it is a pathway out. Over time, it's a pathway out. And if you can, your education will take some time, but I spend probably myself about 15 minutes a day doing this stuff. I look every day, check them every day, mind my own business. I check them every day, and I see, how that segment of my business is progressing and my life is progressing. So when you have the mindset of trading stocks, you're not really owning a business. I'm not saying buy and hold forever, because Buffett sold his airlines and his banks last year, right? He doesn't buy and hold. As soon as the business is no longer attractive to him, he sells the business, which is another advantage of paper, is the liquidity. Selling real estate's tough. Selling your own business, if you had a restaurant you want to put up for sale, good luck. That's tough as heck to do.
Yeah, especially if it's not doing great.
Yeah, so there's advantages and disadvantages to every asset class, but I hate playing the asset class wars. Business is better than real estate. Real estate's better than commodities, or stocks are better than business. Baloney. It's about what fits your spirit, what fits your current situation, your abilities, your passions, all that type of stuff. It's a big deal. So when we say, how do we do this as a business? Well, businesses have an open and a close time. Mine is 15 minutes, but it's there every day. If you don't open your doors, you're not doing business. Mind your own business, like it says in Rich Dad, Poor Dad. A lot of people will go months without buying an asset or checking on the assets they own. I try to monitor these weekly, where we look at all the assets we have and all the cash flow we have in a weekly meeting. We say, how are we doing? You know, how's the commodities doing, the gold and the Bitcoin doing, right? How's the real estate doing? How are the stocks doing? How's the business doing? And we're going to make policies. If something's wrong, we change the policy, and policy gives you the future. So if you're going to do stocks as a business, don't think that you buy one. No, you watch it every day. You mind that business. If it misbehaves, I'll sell it, but I'm not buying it to sell it high. I'm buying it because I want it to cash flow. Why did Buffett sell his airlines after COVID? He says, you know what? They're not paying a dividend anymore. I think I might be done with them. It might be a long time before they pay a dividend again. I'm probably going to sell these at a loss. I don't care. Okay, chalk that one up to experience. I don't want to be in airlines anymore in a world of COVID. It's too risky for me. Probably his friend Bill Gates in his ear on that, maybe. You know, I don't know. You know, who knows? But that's it. You know,
okay, you said something right there, though. You said well, you didn't say this, but what I gleaned is to buy businesses with dividends. I think every example you gave in the stock was a dividend company.
Yeah, or growth. I mean, in the hope that it will someday. I mean, Buffett bought Snowflake in the IPO. They are not paying a dividend yet. I think he's got maybe one or two others out of all the stuff he owns, but almost all of it pays dividends. But Apple didn't always pay a dividend. And the guy that bought it early, you know, they have a growth phase. You know, you have growth companies that you're kind of buying low and selling high mentality. But then you have income companies who are very established, maybe not growing as much, but they've got a lot of customers, right? Like is Procter & Gamble going to grow a lot? Well, we already use all their stuff, but we do use all their stuff. So then you begin attacking cost basis, and that gets into some of the courses that I teach and getting a better cost basis. Because the problem with dividends is people say, oh, it's 3% dividend. That doesn't even cover inflation. It's not worth the risk of putting my money in a volatile stock to get 3% that doesn't even cover inflation, right? Well, that's because they don't understand cost basis and they don't understand inflation. We cover that in the 4 pillars. That's for another discussion.
Right.
But treat it like a business, like you're serious about it, right? A good business owner will fire people that don't perform. Buffett fires them by selling them. And that's easy to fire by clicking the sell button. Hard to fire when you're looking at this guy and he's got a family and you got to let him go, right? It's just different when you have all the components of the business are run by other people. All the capital is raised. ExxonMobil needs to pay a dividend. They raise a bunch of capital, sell a bunch of bonds. Me as the owner, I don't have to mess with that raising of capital.
Yeah. So that's another nice thing about stocks. Instead of a true or a physical business, I guess I'll call it, you don't have to fire people. You don't have to deal with the HR, the legal.
You're a true owner. And Buffett leaves him alone, even though he's he's the biggest shareholder of Coke there is. Like he's the biggest shareholder at the table, right? Apple, he's like owning like 3, 4, 5, 6% of that now. He's got a lot of that. He owns Apple a lot. So even though he's a major player at the table with a lot of votes at the shareholders meeting, he lets them run it. You know, he trusts his management teams. He's only stepped in himself one time when a bank broke some laws. And I remember him sitting in the congressional hearing where he says, okay, we broke some laws here. I'm going to take it over. I'm going to be CEO for a while. And I remember what he said. He said, you know, lose money, I'll be understanding, but damage our reputation, I will be ruthless. You know, and other than that, he's just let them run it. And that's a nice play to be. Your key is compounding, taking profits, reinvesting, consistent. It's as much about your temperament as it is about your knowledge. When I've screwed up and lost lots of money in stocks, you know, because everyone's going to have that story where they blew up their account or whatever, you know, especially early on. When I've lost money in stocks, I look back at why did I do that? I was ignorant, trying to do something I didn't understand with some crazy option thing that I was not ready to do educationally. But more often it's been my temperament, because my temperament's better with people, and I'm probably better suited for business than stocks because, you know, I'm a fireball. I'm a quick start like you know, boom, boom, boom. And I've really had to learn to manage my temperament because there's emotions when those prices go up or down. You have to own it like a business.
Right.
Bloom doesn't panic when the market goes up and down. They say, are we selling underwear? So when I see a big drop in one of the companies, prices of companies, that I might own, I say, okay, back up. Are we selling? A good example is Kraft Heinz. Okay, are we still selling ketchup? Yes, we are. Okay, great. We can deal with this pullback for a while. No problem. We're still going to sell ketchup. We're okay. We're going to be okay. Are we paying our debts? Yep, we're paying our debts. Got too much debt, but we're paying our debts on the financial statement.
Okay, let me sum up 3 things so far. Minding your business, and that means dedicate some time to it every day.
Consistency.
A recommendation is stocks with dividends.
Or some that may pay some, but you definitely want to eventually have cash flow from that.
Yep. Which we should, by the way, do another show on how to identify those, but
Yep.
We'll worry about that later. The third one was temperament. So you want to run it like a business. Yeah, you can't be a hothead and own a business.
Yeah, your emotions are going to get the best of you if you worry too much about your stock price and not about their fundamentals.
Right. So give me another one.
I think that's good. I think you're consistent. Knowledge. You are not going to do well in anything in life without knowledge. This is my pet peeve is, if someone says, oh, I'm going to be a stock investor, they sign up for a Robinhood account and they think they can go make money now. If you're a police officer, what do you got to do before they let you do that job? If you're an attorney, what do you have to do before they let you do that job? If you're a hairdresser, massage therapist, anything out there that requires any level of skill has some type of training to it. Some type of training. You want to be a nurse, what does that take? You want to be an engineer, what does that take? You want to be a bus driver, what does that take? If you want to be a London taxi driver, that's one of the most difficult tests on planet Earth, to be a London taxi driver, because you got to memorize every road in London and where it is. I mean, it's an insane test to be a London taxi driver. Oh, I don't need any test. I'm just going to go trade stocks at Robinhood. If you're going to start a business or buy a McDonald's franchise, you got to go to McDonald's Hamburger University, they call it, and you got to come up with $1 million before they'll even let you talk to them, right? Because they're serious about running this business. But you think, oh, I can just go trade stocks with no knowledge? And so that's the thing that's my pet peeve is the arrogance. I've traded stocks and options with no knowledge, and I can tell you they will eat you alive. You will be the stock market has a way of transferring cash from people that don't know to people that do. And so I'm always afraid that I don't know as much as the other guy because I'm always a student, always. So I would say temperament. I would say consistency. I would say your opening and closing, your business. I spend about 15 minutes a day on my stocks, and once a month I'll spend 2-3 hours because the options expire and we're going to do another round and stuff like that. And if there's a bad day at business, you're going to work a little overtime, right? If there's stuff going on, I'm like, oh, geez, I got to hedge today. I got to deal with stuff. I got to beta weight the portfolio today. I got to short some futures to get my deltas right. Those days you can work a little overtime. You are.
So let me interrupt you. So I actually saw your webinar on how to invest in stocks like a business.
Yeah.
And you did this. You explained this so well. Oh, and if people want to see this webinar, if you go to the show notes, there's a link in there that'll take you to a page that has this webinar on it. I don't know if you know that, Andy.
I didn't know that.
Yeah, it's cool.
See, I have a business partner.
Yeah.
His name is Mike, and he does everything, and I do very little.
I probably talked to Mike more than I talked to you.
Yeah, which is probably a good thing. Because you and I, we don't talk business, we talk philosophy.
Yeah, we was macroeconomics but you did this thing, and you said, I'm going to butcher this, all right? You said, how would you like a business and you don't even have to sell your own products? And then you're like, how would you like a business? You don't even have to sell any product, right? And you go down this list. You're going to know the list better than me. But
I forgot about this. Yeah, I did.
No, I'm watching this and I'm like, oh my God, that would have solved all my problems. What is this business? And you're like, go invest in Coca-Cola or something like that. It was like, oh my God, you're so right. And then I felt so dumb, right? Because
think about this. Wouldn't it be cool? Think about how proud you could be. I mean, don't let the small amount of shares take away your pride. Look, I'm a proud owner of Apple. Andy, what do you do? Well, I do a lot of stuff. What's one of your favorite things? Well, I own Apple. I taught this to my sons this way. The very first stock I bought for my sons, because they're like, 7 years old.
Right.
They didn't have much. They had lemonade stand money, right? That's it. And I said, of all these companies, what would you like? And they said, well, I really like Disney. We drive around. Oh, I want McDonald's. I hate McDonald's, but kids love to eat there. And they chose those. And I says, all right, let's go on a trip and let's check on our business. And we went down to Disneyland and we saw, we bonded as a family standing in line. That's what you do. You bond as a family standing in line.
Yep. And
I said, so what do you think about this long line? And my son, Zach, says, looks like we're doing okay. Looks like we're making some money here. I go, do you mind this long line? He said, nope. And because he really was taught that it wasn't a piece of paper to buy low and sell high. He was taught that this is a business that he owns and he has a share. He had like 10 shares he bought, like at $50, $500, a lemonade stand money. And I helped him out a little. I had to buy it in my account because even there, they're pretty young to even have a custodian.
Right.
But we go to McDonald's and the same thing. David would walk in there like he owned the place because he did. Right? Because he did. And so take a little pride in that. I think Buffett is a great example. He's so proud. If you go to his event every year, they haven't had it last 2 years because of COVID, but if you go to Berkshire Hathaway's annual event, there's booze, there's Coke, there's Fruit Loom, the guys in the grapes are dressed up. They're very proud about See's candies. This is what we give to the world. Apple computers, this is what we give to the world, right? I mean, that's pretty ballsy when your best friend is Bill Gates, the sworn enemy of Apple, right? But that's how Buffett is. He's very proud of the companies that he owns because he sees himself as a business owner and as a business partner. Look, I'm very proud of the syndications I'm in. I don't own all of the properties, but I own a piece of a bunch of them, and I get my share of the profits. So I own things, and it's a good feeling in America where that's really what freedom is. Before that, what is real estate? Well, real means royal, right? The king's going to allow me to have an estate, right? A mortgage is an engagement till death, right? I own stuff. If you have a king, you don't own anything. But if you live in a country where you can own things, why not buy a few things along the way? And don't get caught up in trying to find the next Apple when it's $2 a share. There's some great companies out there that you can buy, and I can teach you how to reduce your cost basis to make those dividends sing. I can teach you ways that investors can do that. Never guarantees. There's always risk. Can't make it risk-free in any asset class. But what's more risky? Starting your own business. I've had how many businesses have I had to have failed? A lot more. I've never had a stock go bankrupt, but I've had a lot of businesses fail. I've never had to declare bankruptcy, but man, I've lost huge money trying to start my own business, learning in mistakes, massive. I mean, I could list I think I list a bunch of them in my course, How to Invest with No Money, because there's so many failures. I haven't had a stock go bankrupt on me yet. Doesn't mean that I never owned Enron though. It can happen.
Right. Well, and that you're kind of the key of risk management. So you could take that whole philosophy of risk management and say a huge risk management from being the sole owner of a company is to own shares in it. Absolutely. Hey, we do got to go, but I did want to, well, first of all, everyone, you can get Andy's, not just that course or webinar, but there's like 4 or 5 on this page that they can get to from the show notes. But I did learn one other really valuable thing. And that is next time I take my kids to Disneyland, I'm going to buy them some shares first, because that was genius. That was brilliant. So that'll make those 2 hours waiting for Indiana Jones.
Boys. Looks like we're doing well.
I'm doing that. You're a genius. Not just a great teacher, but not just a great stock teacher, but now you're teaching me parental things. So appreciate it.
You're the best, Greg. I love and appreciate you. And everyone for taking a little time. I congratulate everyone that takes time to watch the videos, because too many people do talking about wanting to learn, and they give lip service to education all the time. But what brings us together, all of us, and what we have in common is that we act. We're here, we're watching, we're moving towards our goals, we're doing stuff. So that deserves, applause and commendation for people investing time to watch. So that's great.
Agreed.
All right, Andy. Give us things you want to hear too in the show note or in the.
Oh yes. Speaking of that, everyone, Andy is not going through chemo. He did lose his weight because he does do what he preaches with his personal development. No, Andy, really, he does not have chemo.
I had testicular cancer years ago, but it has not returned, and I'm growing a beard to be like Greg. Don't hold
just shave your head.
I've lost a little bit of weight, but I keep on trying.
You did it the right way. Diet and exercise, not chemo. But yeah, Andy's right. Please leave a comment.
Leave a comment. Let us know what you want us to cover. We got a lot of fun topics to cover, but most importantly, we're here to serve you. We're here to
absolutely give
what we have. And if I don't know the answer, I'll say I don't know the answer. But we have some experience. So there you go.
All right. See you, Andy.
Thanks, Greg.
Bye.